Good morning, entrepreneurs. Welcome to Sadayasu Japan. Today's lecture is again about your income tax returns. When you think about income tax returns, the most important things is about your residencies. Which countries you are a resident are the most important things to decide whether you need to pay the tax or not. Basically, there are three types of the residence. There are three residence types in Japan. The first, you are separated into the resident and non-resident, and also the permanent resident can be separated into the permanent resident and non-permanent resident. You have to remember these three things. So why the residency is important? Because the taxation for these three types of the resident are different. For example, when you are a permanent resident, you have to pay the tax for worldwide incomes, which means Japan-sourced income and foreign-sourced income. Japan-sourced income is the income you earned in Japan, like a salary for working in Japan and real estate located in Japan. And the foreign-sourced income is the incomes you're earning outside Japan, like you worked in the other countries, or you have the real estate, or you have the interested income from the foreign bank. So, but for the non-permanent resident, you have to pay the tax for the Japan-sourced income and also some foreign-sourced income, not all. And for the non-resident, you have to pay the tax for only Japan-sourced income. So the taxation is different for the foreign-sourced income depending on your residency. So first, we need to separate whether you are resident or non-resident. So resident is defined as like those who have address in Japan, living in Japan, or those who stay or who is going to stay in Japan for a year or more. Like if you are seconded from the other country to Japan, and if your assignment letter say your assignment period is more than 1 year, you are regarded as a resident. And non-resident is defined as the people other than the resident. So the resident can be, there are two categories for the resident. One is a permanent resident, the other is non-permanent resident. First, let's see the definition for the non-permanent resident. Non-permanent resident is individual who doesn't have the Japanese citizenship, I mean not Japanese, and also the individual who spent like more than 5 years, who spent like less than 5 years or less in Japan in the last decade. If you belong to, if you satisfy these two criteria, you are regarded as a non-permanent resident. And the permanent resident is defined as a resident who is not a non-permanent resident. So how the taxable income will be different. For the permanent resident, I said the worldwide income taxation will be applied. So if you make the income from the overseas, like a real estate in overseas, or if you have like an interest income from the other banks, you have to pay the tax for it. Also, but you know the income in overseas is already taxed in that country in overseas. So there, and if that income is taxed in Japan, there is a double taxation. The tax is levied on the same income 2 times, so you can apply for the foreign tax credit to avoid the double taxation. That's a system. And also, you know, the worldwide taxation system is not always bad. For example, if you have an income in overseas, you have to combine with the income in Japan. But at the same time, if you have a loss in the other countries, you can combine them together and offset the loss in overseas and incomes in Japan. You know, you can reduce your tax. If you have like a loss from the real estate in the London or America, you can offset that loss with your salary earning in Japan. So what is the taxable income for the non-resident? Non-resident has obligation to pay the tax for only Japan-sourced income. Like if you have received the salary for works in Japan, you have to pay the tax, and if you have like a real estate income in Japan, you have to pay the tax for it. But what if like you visit Japan for just one day? Do you still need to pay the tax for it? Well, if you do not have the tax treaty, you may have to pay the tax for it. But the situation, if everybody pays the tax for just one day, staying in Japan one day, the tax office will be very busy. So that's why the Japan has a tax treaty with the other countries. Like for example, according to the Japan-United States tax treaty, if you stay in Japan less than 183 days in a year, you don't have to pay the tax for your salary. Also, the other important point is about consumption tax. If you're doing a business in Japan, the consumption tax has nothing to do with your residency. If you provide services and if you do the business, and if your taxable sales in Japan is exceeding 10 million Japanese yen in the second preceding years, you will become the consumption taxable individual. The last category is non-permanent resident. This is non-permanent resident has to pay the tax for the Japan-sourced income and also some foreign-sourced income. Some foreign-sourced income means that the foreign-sourced incomes to the extent that it is remitted to Japan. So if your real estate income is in overseas, the rent income is remitted to the Japanese to your bank account in Japan, that will become the taxable incomes. Today I talked about the kind of complicated things, but it's really important, so please make sure what is your residency are, and thank you for listening. See you. I hope you enjoyed this channel. If you like it, please subscribe. See you next time.